Hi everyone, welcome to ACCA P6 UK version. Now, as we have concluded the chapter number 1 in the previous video, now we will look at the example which is relevant to chapter number 1 of P6 and which will examine almost all of the aspects which we have studied so far. Right? Now, please come to page number 5 of the notes where you will find the comprehensive example. Now, I would not share the notes through the screen with you this time because I will have to do the question. If I share the screen, you won't be able to see me do this question on the board. Alright, so please keep the question in front of you on page number 5 of the notes, which you can download from Accountancytube.com. I hope by this time you have already downloaded the notes. So page number 5 of the lecture notes, comprehensive example. Now before I do it on the board, you can have a go at it if you want. You can just pause the video and try this question if you want. If you feel confident that you can do so, just pause the video and try to have a go at it. And then you can watch me do it as well, so then you can rectify your mistake. A better way to grip on a topic and grip on a question is always to do it yourself first, then see the tutor do it. Because that way you will have a go at the question which will test your own understanding, and then you will compare your answer with the tutor. That way you will understand the concepts clearer and in a better way. Alright, so anyway, I will start doing the question now. If you want, you can pause the video and do it, then watch me do it and compare your answers with these answers. Alright, so I will just start a question now. If you want to do it yourself, just pause the video and then start doing it. Alright? Rahul had the following income and expenses during the tax year 17-18. So Rahul is the taxpayer name. I have listed the taxpayer name on top. Then income tax computation for the tax year 17-18. As I told you while making the income tax pro forma in our very first lecture, I think, that's how we make the income tax pro forma. And then we divide the income into 3 sections: non-savings, savings and dividend. And all the sources of income and expenses are given to us in the question. So first of all, it says that Rahul had the following income and expenses during the tax year 17-18. Now first the list of income is given to you, then the list of expenses are also given to us. So first of all, what are the sources of income? So we'll keep listing the sources of income here in the description side, and then we will put in one of these columns, non-savings, savings or the dividends. Alright, so first of all is employment income. Right, so I have listed down all of the income sources which are given to us in the question, except for the one of child benefit. Now, examiner has given us child benefit just to test our knowledge about the child benefit income tax charge. We know that when adjusted net income is over £50,000, then we might have to pay the child benefit income tax charge, but we will see it later. For now, these are the income sources which we need to list down in the income tax pro forma, which are given to us in the question. So first of all, employment income. Now where will the employment income go? Non-savings, savings or dividend? Yeah, you are right. Only dividend will go into the dividend, interest income will go into the savings, the rest of the stuff, whichever it is, will go straight into the non-savings. So employment income into the non-savings. How much is it? £80,000. So that is into the non-savings income, £80,000. Bank interest, it will go into the savings. How much is it? £20,000. So £20,000 into the savings. Then we got dividend. Dividend will go into this. Dividends, it is £10,000. So that will go into the dividends. So £10,000 worth of dividends. Income from discretionary trust. We know that whenever we receive the income from discretionary trust, 45% of the tax has already been deducted. So in order to gross it up, we will multiply by 100 divided by 55. So how much is the income from discretionary trust? It is £5,500. So multiplied by 100 divided by 55. So it is £5,500. So if we do this calculation, it will come to £10,000. Alright, so that is our income from discretionary trust. Likewise, income from life tenant trust, which is interest in possession trust basically. So whenever we receive the income from interest in possession trust, 20% tax has already been deducted. So in order to gross it up, 100 by 80, not 20, sorry, my mistake. So 100 by 80 for the life tenant trust. Right? It is £4,000. So multiplied by £4,000, whatever the amount is. Now it tells us in the question it is paid out of non-savings income, so it will go under the non-savings column. if it would have told us that it is paid out of the dividend, then it would go into the dividends. If it say paid out of the savings, then it will go into the savings. However, in the question it says paid out of non-savings income, so it will go into the non-savings. So how much is it? 4,000 multiplied by 100 divided by 80. So the gross amount is 5,000 pounds. Please remember, whenever we are making the income tax pro forma, we will always write the gross amount in the income tax pro forma. If the net amount is given to us in the question for some sources of income, we need to gross it up before we put it into the income tax pro forma. Alright, so these were the only sources of income which were given to us in the question. Next thing to do is to deduct the less deductible interest. So deductible interest will be deducted now. Now what is deductible interest? We know that when we take a loan and we invest that loan for one of the reasons, for one of the purposes, for one of the projects, then interest paid on that loan is deductible interest. Now see, in the expenses it says interest paid on loan for partnership. Now loan for partnership was one of those reasons. If you move to page number, hang on, let me see, page number 2 of your lecture notes, in note 2 it says investment in partnership. So whenever you have taken a loan and you have invested in the partnership, that interest paid on that loan is deductible interest. So that's why we'll deduct it out of this total amount. Alright, so less deductible interest. So deductible interest will first be deducted out of the non-savings income, then from savings income, and finally from the dividends income. Right, so how much is the deductible interest? It is given to us in the question. It is 12,000 pounds. So 12,000 pounds will be deducted out of the non-savings income, because we can deduct all of it out of the non-savings income. So that's it. And after that, if we total it, it will be net income before personal allowance. Alright, so that will be our net income before the deduction of personal allowance. Alright, so how much is it? 80, 90, 95, 90, 95, 93, 83. So it will be, so that is our net income before personal allowance, 83,000 pounds of non-savings income, 20,000 pounds for the savings income, and 10,000 pounds for the dividend income. So that's our net income before the personal allowance. Then next thing to do is to deduct the personal allowance. So now we will deduct the personal allowance out of it. Now how much is the personal allowance for our current tax year? It is 11,500. Now first it will be deducted out of the non-savings income, then from the savings income, and finally from the dividend income. Alright, now before we deduct the personal allowance out of it, we know that personal allowance might be reduced. Personal allowance sometimes is reduced depending on the adjusted net income. Alright, now how much is the adjusted net income? If adjusted net income is in excess of 100,000 pounds, in that case personal allowance might be reduced. Alright, so that's why before I put the personal allowance of 11,500 here, I will put a note 1 here, that is N1, and I will make notes here of the reduced personal allowance. Alright, so that will be our N1 personal allowance. Alright, now personal allowance calculation is that we need to see how much our adjusted net income is. Now calculation of adjusted net income, let me do it here. So now in order to calculate the adjusted net income, what we need to do is we need to take the net income before personal allowance. So in order to see, we'll have to total it here. So that would be our total. Now when we see our total, if we total this amount, it will be our net income before personal allowance. Alright, so 83 plus 30, it is equals 113,000 pounds altogether. So that is our net income before personal allowance. Alright, so that's what we need to put it here. So that's our net income before personal allowance, 113,000 pounds less contribution into the personal pension contribution. So we need to deduct the personal pension contribution out of it. So how much was the personal pension contribution? Could you check in the question? In the expenses section, it tells us that how much he has contributed in the personal pension contribution. Now, if we go to the question, it says that £16,000. Now, £16,000 was contributed in the personal pension contribution, but please remember this is the net amount. However, we have to take the gross amount here in order to calculate the adjusted net income. So 16,000 was 80%. How much would be the 100%? So 16,000 multiplied by 100 over 80. So that is gross amount which we need to take. So how to take the gross amount? 16 of £20,000. So if we deduct this one out of this one, so it would leave us to £93,000. All right. So 113,000 less £20,000, it gives us £93,000. That is our adjusted net income. Now we know whenever adjusted net income is less than £100,000, we do not need to reduce the personal allowance. That is our adjusted net income. All right. So that is part of the N1 anyway. So we will write it down here that adjusted net income is less than, you need to write it down in order to gain the marks. Adjusted net income is less than £100,000. Alright, so adjusted net income is less than £100,000. That's why personal allowance would not be reduced. So personal allowance would remain exactly the same, 11,500. Now we could have written 11,500 straight away without mentioning this point, but if you do not mention this point, you would not get the mark for personal allowance, because there will be certain couple of marks in the exam question. So in order to gain them marks, you need to state to examiner that you know this rule, how to reduce the personal allowance. All right, so that's how you do it. Right, so that was our personal allowance. So after the deduction of the personal allowance, so taxable income £71,000, 71,500 in the non-savings section, 20,000 in the savings, and £10,000 in the dividend section. Altogether, it makes 101,500. Right, so that is our taxable income. Now, on this amount, we have to calculate the tax. Now, how to calculate the tax? We have to calculate the tax according to the tax banding. Alright. Now please remember, whenever we have contributed something in our personal pension contribution, our normal bands will be extended by the gross amount of contribution in the personal pension contribution. Alright. So how much we have contributed in our personal pension contribution in this question? We have seen it here. We have contributed how much? We have contributed £20,000. Gross amount is £20,000. So whatever our normal band is, the basic band and the higher band, or basic rate band and the higher rate band will be extended by the gross amount of the personal pension contribution. All right. So we need to we need to extend our basic rate and the higher rate band. All right. So while calculating the tax, we need to see the the normal basic rate band and the higher rate band in the section in the notes on page 1. It tells you the different bands. So from 1 to 33,500, it's basic rate band. So 33,500 is our normal basic rate band, whereas now it will be extended by the £20,000. So it will not be 33,500 anymore. It will be 33,500 plus £20,000. So 53,500 would be our normal basic rate band. Likewise, our higher rate band will also be extended. So our normal higher rate band is £150,000. And it will be extended by the £20,000, so it will now be £170,000. But in this question, our income is only 101,500, so we don't need any extended higher rate band. However, we do need extended basic rate band. So our normal basic rate band is 33,500. In this question, it will be 53,500. So what we need to do is a calculation of tax. So we can write it down here. Right then, so I have calculated the tax liabilities already, just to save yourself time. So that is calculation of the tax liabilities. How have I calculated it? There is our taxable income, and we have to calculate tax on that according to the according to the bands which are given to us in the questions. And these banding will also be given to you in the exam paper. Alright, so what are these bands? So let's see on the page number 1 of your lecture notes, normal bands are given to us. And please remember, as I said to you earlier as well, that our normal bands will be extended when the individual has invested money in the personal pension contribution. Now normal banding are given on page number 1. If you move to page number 1, it says up until 33,500 is a basic rate band. So that is our normal basic rate band of 33,500. It will be extended by the gross amount of the personal pension contribution. So it will not be 33,500 anymore, it will be 53,500. So up till the basic rate band, 53,500 multiplied by 20%. Now where did I get this 20% from? In the question. So from £1 to 33,500, it's 20% if it is non-savings income, it is 20% if it is savings income, and if it is dividend then 7.5%. Alright, so this income was non-savings, as I took it out of this one. So 53,500, 20%. Now the next £18,000, because 71,500 less 53,500 equals 18,000 pounds. So the remaining 18,000 pounds of the non-savings income is at the rate of 40%. Right, so that's why I took the 40% of 18,000 pounds equals 7,200. Please make sure you recalculate these calculations, because I'm not sure if these are right or not. So please make sure you always redo the calculation bit. Alright, so this was our non-savings income, as I have totaled here as well. 53,500 plus the 18,000 pounds equals 71,500. So that was our non-savings income after the extension of the basic rate band. Now savings income, we know that our income falls in the higher rate band. Now higher rate band holder will get 500 pounds of the interest income, savings income nil rate band. Alright, so out of the savings income, 20,000 pounds, 500 pounds at the rate of 0%, as I written here, 500 at the rate of 0%, the remaining amount at the rate of standard rate, which is 40%. Alright, so 19,500 at the rate of 40%. Now these bands again are given to us in the exam table. It will be given to us in the exam paper, and these are given to us on the page number 1. So 19,500 at the rate of 40%. Right, so savings income is all done as well. So the remaining bit is dividend income. So dividend income doesn't matter regardless of the tax paying band, whichever band your income falls in. Dividend income, first 5,000 will be exempt, first 5,000 at the rate of 0%. So everyone is eligible for the nil rate band of 5,000 pounds in the dividend income, regardless of their tax paying bands. So even though it is in the higher rate band, he will still get the 5,000 pounds nil rate band. So 5,000 of the dividend income at the rate of 0%, remaining 5,000 at the rate of 32.5%. Now why 32.5%? Because the income falls in the higher rate band. Alright, so let me check it again. If it is 32.5%, yes, 32.5% for the higher rate band if it is dividend income. Right, so these 10,700 plus 72 plus 0 plus 78 plus 0 plus 1625 equals 27,325 is our total tax liability for this question. Alright, however, please remember, because I have written down 53,500 here, we will have to communicate to the examiner that we know we have extended our basic rate band. Alright, so for that I can write it down as note 3 here if I want. So note 3, I will explain the bit. Note 3 will be about the extension of the band. Alright, so here if I want, that would be our note 2, and that will be our note 3. Alright, so our basic rate band of 33,500 was extended with the gross amount of the personal pension contribution of 20,000 pounds. Right, so that's why I've taken 53,500 here, but I have to communicate to the examiner that I know this rule about the extension of the extension of the basic rate band. Alright, now this bit here, if it is going out of the frame, I'm reading it out to you. Basic rate band of 33,500 was extended with the gross amount of personal pension contribution of 20,000 pounds. That is our note 3. So that's why I've written down note 3 here, just to communicate to the examiner that I know this rule. otherwise examiner will not give me the marks. All right, so please make sure whatever you have written down here, tell examiner that you know this rule. Otherwise he cannot assume that you know this rule. All right, so after the calculation of the tax liability, this is our tax liability, we'll have to move forward now and complete our question. So if I just make this out like this, so because of the lack of space here, you can write it down beneath that. This bit which I'm going to do now, these are notes, you can write down wherever you want, but this bit is a continuation from here. Because there is not enough space beneath that, I'm writing it down here. So I will take the 27,325, so that is our tax liability. Let me put another line here as well. So that is our tax liability. I'm running out of the ink as well in the marker. Right then, tax liability is how much? 27,325, so that is 27,325, that is my tax liability. Now I have to reduce this tax liability by the tax reducers. It says in the question, in the expenses, investment in the venture capital trust, investment in the EIS, and investment in SEIS as well. So actually he has invested in all of three schemes. So investment in let me write down the tax reducers first. So less tax reducers, because these are tax reducers, aren't they? So investment in investment in first in VCT, that is the right order to do it. VCT, EIS, and SEIS, Seed Enterprise Investment Scheme. So that is basically the right order to deduct it. VCT first, then EIS, and finally Seed Enterprise Investment Scheme. Right, so that is the right order to do it. So £20,000 in the VCT, then £10,000 in EIS, and £6,000 in SEIS. In SEIS I get how much? 50% of that. I get 30% in EIS, and I get 30% in SEIS as well. Alright? So if I take 30% of that, it equals how much? £6,000. So £6,000 of the £6,000 of the VCT. Please make sure you redo the calculation, because I'm not good in mathematics in the calculation in the mind. All right, so that is 15,325. Now I have to deduct the tax deducted at source. We have got a couple of these things. One is income from discretionary trust, and other one is income from interest in possession trust or life tenant trust. So 4,500 from here and 1,000 from here. So that is less tax deducted at source. 4,500 from this one and 1,000 from this one. So basically total is £5,500 which will be deducted out of the total 15,325. 9,825 is my tax payable to HMRC. So that is a tax payable 9,825 to HM Bradley Customs. But please make sure, there was one thing which we have omitted earlier, which we need to consider now, is child benefit. Please remember, whenever someone is receiving the child benefit and they are earning in excess of £50,000, their adjusted net income is in excess of £50,000, then there will be the child benefit income tax charge. Now if it is in excess of £60,000, then whole of the amount which they have took as child benefit will be child benefit income tax charge. Remember when we looked at the child benefit income tax charge, whereas his adjusted net income is £93,000 here, right? Now we know that his adjusted net income is way more than £60,000, so all of the amount of child benefit will be child benefit income tax charge. So that is the income tax payable plus child benefit income tax charge. Oh my god, I'll have to sit down. 9,825 plus £7,000. that is what they have to pay to HMRC. But also writing just this child benefit income tax charge here is not enough. You will have to explain this point as well. Now, like I have written down N3 here, you can write down N4 here. All right. So if I write down N4 here, and I ran out of my ink in my marker, but I will have to write down the note because otherwise the question is incomplete. So N4, I'm writing down here, note 4, the adjusted net income. So I will have to write down adjusted net income of Rahul. Adjusted net income of Rahul. Rahul is the taxpayer. Is in excess. Oh my God! In excess of £60,000. In excess of £60,000. Adjusted net income of Rahul is in excess of £60,000. That is why. So that's why all of child benefit will be income tax charge. Will be income tax charge. Will be income tax charge. All right. So adjusted net income, that's what I have written in the note 4. If it is going out of the frame, please make sure you write down. Note 4 is adjusted net income of Rahul is in excess of £60,000. That's why all of child benefit will be child benefit income tax charge. All right. Right then, so that was our comprehensive example. It was quite comprehensive, wasn't it? So there was, if you look at the comprehensive example question, from looking at the question, you can't tell how complex it is, but there are small complexities normally students omit. So if you do not omit them, then that's fine. Now say for example, this personal allowance bit here, there was reduction of the personal allowance. At least the note was needed. A calculation of the adjusted net income, that was another, the easy marks, but the technical, the hidden marks. Another thing, charge. This note as well, note 3, note 2, and then these, the VCT and EIS schemes as well. This bit, tax deducted source, it was also important. So these bits and pieces altogether are very, very important marks. Now stating just this employment income in the non-saving and dividend in the dividend income won't pass you this paper. And if you just write down that thing, you won't pass even this question as well. So in order to pass this question, you need this note 3, you need this note 1, note 2 as well, note 4 as well. So these notes are more important than this bit, the face. Although the face is equally important, but there is lots of stuff going on behind the scenes. There's a lot of hard work behind the scenes as well. Alright, so that's it for this question. If you want to note down the answers, you can do so. However, when I started the question, I told you that you do this question and recheck it. Now some of you might have done it yourself, and now you might be rechecking. Now if you have done everything right, then hats off to you. You are spot on. And if there are some mistakes, don't worry, you can rectify them now. Alright, it's not too late. I'll see you in the next video, and we will continue our journey with P6. Goodbye.